You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is Friday. It is noon Central. It is 1 p.m. Eastern. Or it's whatever time you're listening to this after the fact. Welcome to Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THEOptionsInsider.com. Hope you're having a good trading week out there. A lot popping off this week. We have a lot to get to. Should be fun. Remember, if you want even more in your lives, you want to come back after Vol Views to get yourself a dose of unusual activity. You wanted an awesome pro Q&A earlier this week with one of our recent guests on Vol Views. We talked a lot about international vol with Steve Sosnick, tackling all your questions earlier this week in the pro Q&A hot seat. Only one place to go, theoptionsinsider.com/pro. Get in there now. Get your name in the hat as well. Man, it's hard to believe June already almost halfway done. Man, this year's flying by. Get your name in the hat. You too can win the June Pro Trading Crate as we go around the horn and see who is joining us on the old program today. First, let's go out to the hinterlands of Chicago, where he's dodging scooters and electric bikes left and right. He is none other than Mr. Russell Rhoads, holding court these days at the Kelley School of Business, where he is corrupting young minds for future generations. Mr. Rhoads, welcome back to the show. How goes the corruption, sir?
The corruption's okay. I'm just sitting here shaking my fist and saying, kids, get off my lawn.
Get off my lawn, kids.
Yeah, it's the electric scooters it's as bad as the cicadas.
Just beset on all sides out there
exactly.
In the hinterlands. Let's go out to the very hot realm of Austin, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show. Are you too beset by e-bikes and cicadas, sir?
We don't have the cicadas that you guys have up north. We do have some locusts and stuff like that, but we're actually south of the cicada line. So we don't have 17-year cicadas floating around. I hear it's crazy up there. Is that true?
I wouldn't know. I'm hanging out downtown. You got to ask these hinterland folks, and they would tell you. We don't have such things downtown. Speaking of the hinterlands and of corrupting young minds, that brings us to our guest holding down the Eurex hot seat. You may know him from his myriad appearances on our This Week in Futures options program. Joining us once again, it's been a little while, here on Volatility Views. Actually, it hasn't been as long as I thought. It's been since February of this year. So he has made an appearance this year. And of course, on TWIFO, he was just on a few weeks ago. Mr. Rich Excell, the director of the Derivatives and Trading Academy over there at the University of Illinois. So he's corrupting young minds towards the world of derivatives, luring them toward the dark side, which is what we like to see. Mr. Rich, welcome back to the show, sir.
Mark, thanks for having me. Always a pleasure. Russell, I'm trying to join you. I'm trying to follow your lead in corrupting young minds. So any guidance you can give me, that'd be great. And Mark, the cicadas are bad. they're so bad they've chased me up to Southwest Michigan this week to just to kind of get away from them and then get away from the e-bikes as well.
E-bikes and cicadas chasing everyone hither and yon as we head right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, where we break down everything popping off on the domestic front. We'll get international in a second, and spoiler alert, there's some stuff popping off there as well. It's just a crazy week. Whoever said sell in May and go away really hasn't been paying attention, because this week in particular, a lot popping off. We had, of course, the Fed on the docket this week, but then on top of that, we had CPI pretty much the same day, which is a very rare occurrence. We don't see that too often out there. So two hot numbers coming back to back. It's funny. We started this year rallying mostly on the back of two things, the strength of AI and this belief that the Fed was going to cut rates 3 times this year. Halfway through the year, nothing from the rates cut front. And then, of course, they're talking about maybe doing one, but that's enough to just rally us hard. The bulls want it. When the bulls want it, they do. Even though you could argue these days, at least, this market is more driven by the Magnificent Seven or even Magnificent Five than ever. I think yesterday we had the majority of the S&P was down, but because a handful were up, we were pretty much up to flat on the day. So kind of a weird time. The breath isn't quite there. If you're looking at your big five, you're excited. Everything else, maybe not. Consumer sentiment coming in today, really bad number. So we are once again seeing this kind of two markets at work, the broad markets, and how people's perception of that, and then this handful of names that continue to just skyrocket to the moon and carry everything else with it. And what that leads to today, listeners, is a market heading into the start of the show. It's mostly red. It's kind of easing up on it, though, so I kind of wonder if by the end of the show we're going to pull that old bait and switch and be all green by the end of the show. We shall see. The NASDAQ is close to unch right now, down about 0.05%. S&P off about 0.15%, but also kind of bouncing off its lows of the session as well. Did threaten to break 5,400 earlier this morning, and now has rallied to about 54 and a quarter, a little bit north of that. So off the lows of the session, the Dow was getting shellacked earlier today as well. Amazon just sucking it down. I'm just kidding. I just like to say Amazon and the Dow, but the Dow off about 0.15% as well. Getting shellacked, though, is the small caps. My goodness, 1.7%. Again, small caps just marching to the beat of their own drum entirely. They're just doing their own thing day after day, which makes them fascinating. All that, listeners, all that mixed together. We had VIX looking frothier heading into the start of the session as we were testing the lows, obviously coming off the lows. VIX also coming off its highs at about a 1265 when we kicked off the show. Puts it up about a third of a point from where it was this time last week. It was threatening a 13 handle earlier this morning. Let's see. Did we get there? Yeah, we did. 1345. So we did get over a 13 handle before giving up the ghost, right back to pretty much where we are right now. VIX getting frothy. A week ago, we were down 8 in VIX. This week, we're back up 8. So we're unched over the last 2 weeks in VIX at about an 84 right now. So roughly 10 points above that mid-70s floor we hit not too long ago, but still not that frothy yet. But intriguing stuff on the horizon. Let's go around the horn. Let's start in the old Eurex hot seat. Rich, a lot to unpack. I know from speaking to you in the past, you're a big Fed watcher as well. So let's start there. What were your thoughts on what happened this week, what the Fed said, the market's reaction, and then what we're seeing on the vol front as a result, sir?
Yeah, that's a great point. I probably come out of this week interpreting things not quite as bullishly as the market did. I respect what the market's doing. The market saw the CPI a 10th lower year over year and got all excited that we're back on trend, especially looking at month on month. But I still see a 3.3% annual number. That's not even close to 2%. The market got excited about the Fed being dovish, but I saw the new dot plots to come out quarterly, taking more cuts out of the curve. I mean, not only that, but if you look at the longer term R star rate, that went up 25 basis points just since March. So I think even the Fed's realizing that it's not going to get, even in the end of the cycle, not going to get nearly as low as it thought. So I come out thinking, hey, the Fed's seeing a lot of what I'm seeing is that inflation is just persistent. And when you talk about, consumers, like persistent inflation, we saw that in U of M inflation expectation numbers today, still well above 3% on both a 1 and a 5-year basis. So, consumers are seeing higher inflation, and, the household survey and the jobs are saying weaker jobs. So consumers aren't feeling very happy right now. And I think that's going to potentially lead to some volatility down the road, but we'll see.
Yeah, the consumers are looking pretty dire out there, which again just speaks to this strange juxtaposition we have in the market right now, where a handful of names are just exploding north and just their gravitational well is sucking a lot of other things along with it. But outside of that, a lot of names are down or treading water, and consumers certainly aren't feeling the optimism that the market was feeling this week. So very strange, very bifurcated realm we find ourselves in. Let's go out to the other academic on the panel, Mr. Rhoads, sir. Obviously a topsy-turvy week, a lot of data hitting at once. What was catching your eye out there this week, sir?
What was kind of interesting on Wednesday, we got the CPI that everybody loved, and the futures markets adjusted around to, looks like we're going to have a rate cut in November. And that's where they're still at. What I did was I was doing a little work looking at how people were using the daily options, and a lot of smart folks, about an hour and a half into the trading day, after everything had sort of settled in from CPI, put on some bearish spreads using SVIX options or using NDX options. And the price levels at the time I saw a lot of these spreads go on was almost the exact same as the close. So I think what some folks were doing was they were taking, the premiums were still really high, even though we'd gotten some, theme adjusting news with respect to the CPI. But the S&P and the NASDAQ didn't really do a whole lot after that when we got the FOMC part. And people that sold options at that point and held them into the close did very, very well. So that was kind of the trading thing that at least caught my eye. And I'll probably include some of those in the stuff that I post this weekend.
Yeah, I mentioned that yesterday on the option block yesterday. I don't often have time to devote a lot of time to watching tick by tick the 0 day. People think I do, but I actually have a lot of shows usually going on and prepping for them. But not a lot of shows this week on Wednesday, live at least. So it gave me a little bit of free time to actually watch and look at some of the levels going on in the 0 day heading into and coming out of the CPI. And you're right, man, there was a ton of juice. I think at the time the futures 54.30, 54.31, somewhere in that level heading into the number. And I was looking at some far out of the money puts. I believe they're 53.65 with about a little over an hour to go. There was a bid well over $1 for those things. So people were looking at a fairly decent probability of a nearly 70 handle move just in the last hour of the day. Obviously, that all collapsed to nothing as we rallied post CPI, got up to threatening 54.5. But even still, when you're threatening 54.5, there was still about a $0.50 bid for the par puts, 5,400 puts, with about half an hour left to go in the day. There was juice for days, and the crazy thing was that actually paid off if you paid $0.50 for them. And I was kind of eyeballing those. I was like, that seems kind of ridiculous, but I was feeling the turnaround. Of course, the turnaround did come. We sold off below 54.20 again, got down to around 54.13, I believe, somewhere in that range. Those puts went from about 50 cents to nearly $4, I think $3.80. So it was crazy town. And then once, of course, that retreat from the highs turned around again, got back up to 54.20, all of that premium vanished and they were back down to, 20 odd cents again. So it was quite the roller coaster ride just in the last hour of the day, which again is kind of par for the course for these 0 day contracts, but I don't get a chance to sink my teeth into it too often. So it's kind of fascinating to watch. And I was very close to pulling the trigger on those 5,400 puts. I kind of wish I did now in hindsight, but of course, past is prologue. But who would have ever said not that long ago, buying nearly 50 handle out of the money puts in the S&P and paying about $0.50 for them with about 30 minutes to go would be a quote unquote good deal. Yet it worked out to be about a 4X winner if you timed it well. So crazy, crazy times out there. Of course, if you came in and bought the $4 puts, you got run over. So again, it's a tale of two tapes out there, but fascinating stuff nonetheless. Mr. Meatball, obviously a lot going on. I know you live in 0 day, so if you have any thoughts on what you saw this week, and also obviously a crazy topsy-turvy week, a lot of data, a lot of numbers coming out on both sides of the fence. What's been catching your eye?
Yeah, I mean, I would say the biggest thing, the craziest thing I saw, and I sent that to you yesterday, was the ridiculous volume in Apple.
Oh yeah, how's our YOLO friend looking? I'm guessing not that great.
I mean, unbelievable. And there's more today. In the world of zero DTE, today Apple reigns supreme. They have traded 120,000 of the 215 calls, 60,000 of the 212.5s, 63,000 of the 217s. They bought 90. They bought 100,000 of the 210 puts, or traded, excuse me, and another 80,000 of the 212.5s. So it spreads. It's obviously an Apple. SPX, I think zero DTE is kind of assisting it in some of these bounces and keeping it in a range. The volume's pretty heavy today, especially on like the 5420s, and the 5430s are really busy. There's some pretty decent downside on the 5400s. That seems to be kind of the floor for the day that they've set. But the volume continues to just be off the charts. And another zero DTE champ is NVDA. I don't know if you've ever heard of it.
Never heard of this one. Tell us about it.
But apparently it's they make potato chips. And the 132 calls, 150,000 of them going up, 132.5 calls, 110,000. The 131s, 180. The 131.5, 97. They've done 137,000 of the 131 puts, 230,000 June 130 puts expiring in 2 hours and 40 minutes. This volume in some of the zero DTE stuff, it spreads. It spreads.
Yeah, the exchange is seeing these numbers. They're not going to be able to list 0 day Tesla and NVIDIA fast enough. Unfortunately, not getting there yet, listeners. Listen to some of our chats we did down at OIC about the future of that stuff. Doesn't look bright, but we shall see. You're right. Apple right now trading a little bit shy of 211.5, off about 280 on the day, and 122,000 of the 215 calls trading today. Those are not looking great. Prices from 6 cents up to about, looks like 21 cents. So quite the range. But yeah, it's a different ball game out there when you start throwing all this 0 day into the mix, listeners. But let's keep on rolling out to the land of the volatility surface, listeners. And spoiler alert, it's up this week, but ever so slightly. I'm sure if we wait a little bit and re-rack this later in the show, we might actually be down or at least flat on the week. Coming into the start of this segment, we had the June future up slightly, about 0.15. Again, bit of a rounding error out there. July up a little bit more, up about a little over a third of a point out there. Where we're topping out right now, all the way out in everyone's favorite, the October cycle, is about an 1830. So not quite at the 20 handle, but within spitting distance of it. It won't take much to get us back up there. A little bit of a shock to the system. We could be seeing a 20 handle in that OCC future. Beyond, if you go out to February of next year, we get to close to that level again, about 18, 19 or so out there. So intriguing levels. Also, obviously, a pretty steep curve between the front month and October. That's kind of what we've been seeing for a while. Rich, as our guest, we'll start with you, sir. What's catching your eye out there on the volatility surface this week?
Well, I mean, there's a couple things I think that, certainly we'll probably get into it, but, Europe is really kind of showing us the way there. But, to me, I think even within domestic volatility, looking at VIX, et cetera, I'm just really kind of focused on this fact that we have some really low implied correlation. And then if I'm looking at the credit markets, I'm starting to see the series of higher highs and higher lows and credit spreads. And to me, credit spreads always lead in equity implied volatility. So I'm looking at those things and saying there's a lot of yellow flags out there that suggest that we might be seeing some higher implied volatility. Now, I know we're in the middle of the summer and we're approaching the 4th of July holiday, so I'm not suggesting it's going to happen in the next week. But that's what's on my eye is kind of how we, I know everyone wants to focus on the zero DTE, as Mark was saying, but I think as you look out beyond a month, into that 1 to 3 month area, I start to see some periods where we might be seeing some volatility pick up, and with these low levels that they're not cheap necessarily because it's not a lot of things aren't moving that much, but with low levels of implied volatility, you might set up for some interesting ideas as we kind of look out for about a quarter.
Interesting ideas. I smell some crazy calendars in your future, Rich. I know you like a calendar or two. Maybe we'll sneak some of those in here today. Mr. Rhoads, same question for you, sir. What's catching your eye out there on the vol surface this week?
Well, just first off, my friendly reminder that the VIX futures go off the board on Tuesday morning, not Wednesday morning this week. And because of that, we're pretty much seeing the front month future, at a little bit of a premium, but not too much of a premium relative to VIX. It's about a 50-cent premium right now. You would think, and I say that's not much of a premium, but you'd think summertime, no economic numbers, and only one trading day left, that we might, that they may be closer to each other. But I'm sure that there's, the weekend risk that's out there that keeps hanging over the market. And then I know we're going to talk about it in a minute, but just the explosion of volatility expectations out of Europe as all those evil far right people are starting to win elections over there.
European volatility explosion, you say? We'll get there in a second, listeners. Can't bury the lead on that one much more. But before we go there, listeners, let's go back to the Southern volatility mecca. Mr. Meatball, sir, anything catching your eye out there in the land of the volatility surface this week, sir?
Yeah, it's been interesting on the VIX curve. Got really, really, steep, and has since kind of normalized a little bit. You got a tight spread between the cash and the front. I still think July has a little bit of a hump in it, but I think it looks a little cheap. It's only trading about the July expires in 35 days, and it's trading less than 14 with the VIX 12.5. That seems kind of inexpensive to me on a relative basis, especially historically to where it's been, with something else on the front of the board. So that's the one thing that kind of hits me in the head, is that I think July is a little too cheap.
And what's hitting us in the head, we can't bury the lead anymore, listeners. Russell alluded to it. Our chat is obsessed with it. Option God saying, I want to hear about VSTOXX. Frank saying VSTOXX, one of the more interesting products in the market right now. The Queen saying she's looking to dip her toes into VSTOXX. EU elections making it a little bit crazy this week. Yeah, our chat's been lured to the dark side. How about you, listeners? It is time for the International Volatility Review.
It's time to explore what's happening in the volatility market beyond our shores. It's time for the International Volatility Review. The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX.
All right, listeners, let's get down to it. International Volatility Review. And this is why we do this segment for weeks like this. We could talk about domestic stuff all the time, and clearly stuff popping off there on the vol front as well. But it's these weeks of disassociation which really makes things interesting out there. I have to concur with one of our live chatters, Nichols, saying 19 VSTOXX, WTF. It's kind of my thought of some of our co-hosts here today as well, when we saw these numbers earlier this morning coming into the start of the show. In fact, your low, Mr. Nichols, is actually nearly a 20. 1986, great year. It's also where VSTOXX closed heading into today. If you're thinking that sounds a little bit higher than last week, you are correct. Up nearly 6.6 handles on the week. We were at about a 1328 on the show this time last week. So getting frothy out there. Not too long ago, we were kissing. We were just smooching that 52-week low of right around 1212. We got right around there again. And then now here we are, 1986, not that far away from the 52-week high of 23 1/3 that we set back in October. Now, of course, what is driving this? Russell alluded to it out there. You probably have seen the headlines by now. Huge upheaval in the EU elections over there. France now having to call snap elections as a result. So a huge shock to the political system over there. VSTOXX, of course, focused on Europe. So it's going to feel those ripples ever more prominently. And that's why we're seeing just such a stark contrast. Spoiler alert for the crystal ball listeners. I don't think any of us had nearly a 20 handle on VSTOXX. And if we did, we probably would have got laughed out of the room. So that shows you again how fun, interesting, and or challenging this can be. But Mr. Rhoads, what's catching your eye out there in VSTOXX land this week?
Well, what's catching what I find really interesting about what VSTOXX is doing, and well, first, because I know I'll get hit on this and I'm going to forget it, I flipped from being long VSTOXX and short VIX to short VSTOXX and long VIX many points ago. So down about 3 points on that spread right now. That's and there's been much bigger drawdowns on the history of the thing that I'm working on. But you know, VSTOXX, it's looking at some election uncertainty. And one of the cool things about Europe is, you know, we've got the Trump bump, the Biden bump, the whatever you want. If she comes back in, the Hillary hump. And with October VIX futures at a premium, and actually VSTOXX futures have been a premium out in October as well. And I think now what we're seeing is a different kind of risk that just popped up out of nowhere this past week, where some snap elections got called, and there's just uncertainty as to the future leadership around Europe. The French stock market, which was up nicely on the year, turned red on the year today, and Eurostoxx 50 was down 1.95% on the day. And that is the kind of price action that you would expect your volatility index to run to 20 on. It's going to be interesting to see how this plays out. And I'm digging up all my data from back in the day when we had Brexit. And, you know, Eurostoxx was elevated. VIX wasn't paying any attention to Brexit. Brexit passed. VSTOXX didn't do a whole lot, but VIX caught up with it very quickly. And I think got to check some dates, et cetera, check some spreads, but I think there's going to be some trades to do there.
Yeah, there might be, sir, and I feel your pain on that spread, but you're right. You'll have some time. You have some time to maybe work out of it. A fascinating stuff afoot. Rich as our guest. Now, I'm always curious for people coming on the show, you know, their level of interest, exposure, and knowledge of what's going on internationally. This is a week where, if you're going to be paying attention, this is certainly one of the weeks where you wanted to. I know when you and I talk, traditionally you're looking at a lot of domestic markets and domestic vol and things like that. How big of a factor is international vol in your analysis? And what are your thoughts on this dramatically widening spread we're seeing out there this week?
Yeah, I mean, having lived in London for a while there, I definitely very familiar with VSTOXX and the European vol, et cetera. Not always the easiest to trade relative to VIX for sure, but what we saw, as Russell was saying, with the big moves we saw this week, the VSTOXX options were up like 200%. And VSTOXX futures, I think the volumes were up like 95%. So I mean, there was money going to work in these products. And as you talk about that spread, which is normally, I mean, to me, I always think if it's not, that the spread between V2X and VIX isn't like 2 points, something doesn't seem right. And like you said, it went up to like 7 or 8 points this week. And so that's kind of crazy. And I look at it and I wonder, well, how I can read through that into what's going to potentially happen in the U.S. when we think about what the trades might be. As Russell alluded, the EU elections may be shifting to the far right. Now, those were the parliamentary elections, and so those are usually kind of, they're not really policy-making electorate, and it's just more of is it a protest vote? And I think, to me, that's what Macron is kind of saying, is like, this is all kind of BS. I'm going to call a new election and I'll show it to you. Taking a big chance. And then, as Russell mentioned, the French stock market is not really feeling the love there. And I think, if you look at the bond market, look at the Haute versus Boon spread. So the French government bonds versus German government bonds, that's blown out. And that's, to me, if you look at that spread between French and German government bonds, that overlays pretty nicely with the V2X as well. And so I think that's another thing where you can look at that and say, that's a corroborating evidence that perhaps there's something more afoot. And so it's not just France with his elections. Now you got UK with elections because Sunak called them. There may be other places to do that. A lot of uncertainty. Markets don't like uncertainty, and that's what we're seeing going on in Europe, as we kind of alluded to before with the, what we alluded to before with the U.S. consumer sentiment center. Are we going to potentially see a protest vote? Are we potentially going to see uncertainty creeping into the U.S. markets, and is that what's what we could potentially see here? You don't always see that, so I don't know. To me, I think that's something where it's definitely on my. I'm a big believer that markets are going to essentially move in sync at some point. It's not just the equity indices, but look, like I mentioned before, credit spreads. Look at FX volatility. Look at a lot of different drivers, and when risk goes up in one market, especially to the extent that we've seen it tends to spill over in other markets, I think, and I think that's something that's on my radar.
You can tell you're a former FX guy. You're the only guy on the network talking German versus French government bonds out here, which that's why we like having you on the show here, Mr. Rich. By the way, Russell, our chat has your back. They're chumming in saying they feel your pain. The OG says he literally feels your pain, Dr. Vix, and Nicholas says he's very sorry to hear about your spread. So our chat is feeling your pain, Mr. Rhoads. To make it better,
good.
There you go. Well, there'll be the salve to your wound out there this week. Mr. Meatball, I know you're hanging out in the Southern Volatility Mecca. Domestic vol, mostly your focus. Kind of hard, though, to ignore this incredible disassociation going on out there. Is it the first leg of it? Is it just the shock to the system and it's going to come back to normal? Anything catching your eye on the international vol front this week?
Yeah, as they were saying, the French bonds caught my eye earlier in the week, and that seems to be what's really pushing VSTOXX the way it is. That France is like France and Germany basically are the EU when you look at it. Everyone else is kind of secondary or smaller. And
how dare you forget about Italy, sir?
Italy is a wonderful, beautiful country. It is not nearly as large an economy as Germany or France.
What about Luxembourg?
How dare I forget Luxembourg? Any other ones? Liechtenstein, are they in the EU?
I hear good things about their economy as well. Yes.
But so seeing those things, seeing their bonds blow out is one, a warning sign to all the borrowing floating around out there, and two, that's leading directly to VSTOXX blowing up. And VSTOXX is not going to hang out in 20 with the VIX at 12 for very long. Something's got to give.
Mr. Rhoads, I know we're going to get to your weekly rundown in a minute. Before we roll out an international vol review, obviously a hot week. Anything catching your eye? I know we were talking, I believe, risk reversals last week on the show. Anything catching your eye on the VSTOXX options front this week?
I was trying to see if anybody exited that, and I couldn't really pick up on one of those. But earlier in the week, as things started to widen out, there was a nice buyer of the August 16 calls that looks like they may be pretty happy with that because we're up a few points from where that one was. And some bull call spreads, 15-20 July bull call spreads hit the tape earlier in the week, and VSTOXX has done nothing but stair step up for the whole week. So there were some people that got in early before we really started to see the move in VSTOXX that we saw in the latter part of the week.
Yeah, someone should check Marie Le Pen's trading account out. They had some. They were well timed on those trades. I had the same thought. So yes, that was an interesting one. Certainly something to keep an eye on as we keep on rolling. Listeners, are you keeping your eye on international vol? It's kind of hard to ignore right now. These kind of moves. If you're looking at VIX thinking, maybe it's kind of sleepy, maybe I need to look a little bit farther afield, maybe all the domestic catalysts, at least for now, are in the books. Well, then this nearly 20 handle we're seeing in VSTOXX, at the very least, has to make you sit up and say, what is popping off out there? As we head on back to see what's popping off in the land of VIX options, listeners. Was it a banger week? Is it a banger day? I guess the answer is yes to both, but not maybe to the extent you might think. Again, Fed week, CPI week, you'd be forgiven for expecting, okay, 1+ million contracts a day, at least for the middle of the week. And we didn't quite get there. And today's kind of languishing as well. It's doing decent paper. Don't get me wrong. 500,000 contracts, nothing to sneeze at. 513 as of a little while ago. But again, we're not blowing the doors off here, which is probably all a long way around to saying that's why the ADV is actually down coming on the heels of a Fed and CPI week. We're at 838 right now. Still respectable for heading into the start of summer in VIX, but that's down about 9,000 from this time last week. Again, like we said today, 513 on the tape. We'll get to all that fun, what's popping off this week in a second. But first, let's break down the size positions out here in VIX options, listeners. If you're here, you're coming to the show for the puts, you got a few more to look at. I mean, we're still at 8-2 calls over puts, but at least there's 2 puts to be found. Let's see how long it takes to find them. One of them we find right away, listeners. Number 10, 206,000 of the June 14 puts. Our old friends out there. Followed by number 9, listeners, 210,000 of the June 35. So here we go. Right back at it. From the 14 puts to the 35. That's why you got to love VIX. Number 8, 212,000 of the July 18. So, again, all things considered, somewhat reasonable. Number 7, 219 of, here we go again, AUG 47 halves. Probably my favorite strike on the board. Number 6, 221,000 of the June 18. So, again, keeping it somewhat level-headed. Number 5, 224,000 of the July 19s. Number 4, 229 of the June 20s. Number 3, there's our Waldo, 229,000 of the June 13 puts, or your second and final put in your list. Do you like those June 13 puts, listeners? As Russell pointed out, you got one less day than usual playing in those bad boys. So intriguing stuff. Number 2, 283,000 of the June 16s. And then rounding out the top 10 yet again, 526,000 of the July 20s. You have those 20s in VSTOXX. You're looking pretty good right now. June, July, but we shall see in VIX. Again, over 500,000 of those now, 526,000. But before we dive into the flow, we got to kick things off with Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, Mr. Rhoads, let's get to it. Anything catching your eye in Fed and CPI week, sir?
Oh, very little in the weekly space. Probably the biggest day was Monday, and it was a whole lot of bailing out of the money calls and getting a penny for them. I mean, it was kind of ridiculous. On Tuesday, and this is a trade I kind of like. I sort of talked about this as well a week or two ago, or probably last week when we were talking about holidays. Somebody bought 1,000 of the July 3rd 12 puts on Tuesday and paid 9 cents for them. And I kind of like that. It's an expiration before a holiday. There's no real big economic numbers between now and July 3rd. The next big economic number is July 5th, and I'll get to a trade that I think is looking at that in just a second. But I think that's a pretty decent, flyer trade for a very quiet vol in a holiday week. Might even get, one of those settlements that's to the low side that upsets all the traders on the floor. Yesterday, nothing really good on Wednesday. Yesterday, VIX at 1211. Somebody bought 200 of the June 26th 15 calls for 36 cents. That is my trade of the week that I don't like. There's nothing, although, looking at the tape and looking at what VSTOXX is doing right now, maybe I'm wrong on that. But again, there's not a whole lot on the horizon for the next couple of weeks. We don't have earnings. We don't have any major economic numbers that I'm aware of. And usually when you see trades like this, you think that it might be based on some sort of event. Maybe they got a hotline into people over in France, and they know something that we don't know.
We need to have that stamp from the show. We'll put that out on Twitter. The trade Russell doesn't like, and we'll put that out.
The trade I don't like. So there, and that it'll be really funny. We could create an ETF like the Kramer ETF. And if you just do the things I don't like and you fade the things I do like, you make a ton of money. And then finally, today, and I do like this trade, VIX at 1269. Somebody bought 2,500 of the VIX July 10th 17 calls. They paid 60 cents each for them. And the next big economic number that we get is the June employment report on July 5th. My thinking is maybe they're trying to take advantage of VIX at relatively low levels right now. Maybe looking over to Europe and thinking there's a chance that we're going to start grinding higher to narrow that gap a bit. But I'm looking at that one. My best guess is somebody is hopefully playing the employment report on July 5th and thinking maybe we get some sort of spike in volatility around that.
Let's see if we had a spike in volume. I already gave you the answer to that, listeners. The answer is no. But let's see what we got out here in a Fed and CPI week. Like we said, today, slightly over 500,000 contracts, 513 on the tape. The big dog today, 30,600 of the June 13 calls. So some folks may be looking for that little bit of that pop earlier today, piling into those 13s. We shall see how that's working out. Number 2, 25,000 right now. Spoiler alert, not great. 25,000 of the June 25. So that's certainly a bridge too far. Number 3, about 25,000 as well of the Aug 20s. Number 4, 24,000 of the July 19s. And rounding out the top 5 today, 22,000 of the June 13 puts, our old friend, sneaking in there again today. Thursday, 788,000 contracts on the tape. So decent, but not light your hair on fire numbers. The big dog, 60K. Oh, we were just talking about this on Option Block yesterday. This was our synthetic versus calls friend. He was back again. Someone really likes this trade, and they do it on a ratio, which is funky. I have to really dig in and see exactly what they're doing, because we've seen this in the past. It's a synthetic. It was the Aug 16 synthetic this time, but they do it on a ratio, 2-to-1 calls over puts, which you don't normally see, which is why number 1 is 60,000 of the Aug 16 calls, followed by number 2, Aug 40 calls, also 60,000. They do that as kind of that kicker against the synthetic that they do on a funky ratio. Then number 3, 45,000 of the SEP 47 half. So this is kind of that other leg that they also do in there. They add that kind of vestigial SEP leg in there. And then tying it all together, 32,000, so roughly half of the Aug 16 puts. So we have a ratio synthetic versus out of the money Augs versus the SEP. We had them putting that on before, so they could be unwinding some. I'll have to go look and see, but I think they were adding to it. Either way, it's a funky trade. It's been going on for a while. And then number 5 on a funky day yesterday, 29,000 of the just straightforward July 20s. Makes a lot more sense on those bad boys. Wednesday, 821,000 was the number, and pretty much the big dog day of the week, unless today really lights it up. 50,000 for number 1 of the SEP 16s, followed by number 2, 50,000 as well of the June 13 puts. Number 3, 35,000 of the June 12 puts. Number 4, 29,000 of the June 15 calls, and rounding out the top 5 on a decently active Wednesday, 29,000 of the June 18s. Again, all that stuff going the way of the dodo sooner than usual, so clock is ticking on those. Tuesday, 7:31 on the tape. The big dog, 62,000 of the June 14 calls, followed by number 2, 30,000 of the June 13 puts. Number 3, 30,000 as well of the July 15 puts. Number 4, 30K as well. That was the magic number on Tuesday of the Aug 17. So we're all over the place here. And number 5, 27, almost 28,000 of the Aug 15 calls. And then Monday was just the anemic day of the week, only 492,000. Everyone keeping their powder dry ahead of the Fed and CPI. Number 1 was 42,000 of the June 13 calls, followed by number 2, also about 42,000 of the June 14 calls. Looks like we had some vertical action, maybe against some puts as well, because the June 12 puts about 40,000, and the Aug 17 calls going up 40,000 times as well. So some funk across the board there. And number 5, 21,000 of the SEP 35s. Mr. Rich, anything catching your eye out there on the old VIX options front this week, sir?
Yeah, I got to tell you, Mark, I got nothing on that synthetic versus ratio mumble swerve. I'm not really sure what's going on.
It's very funky. I need to spend some time really digging into it.
So, yeah, I love what Russell was talking about, those July calls right after the next unemployment report, because to me, I look at the last employment report, which the headline looked really good, but the household survey looked really poor. And I think there's enough people that would kind of say that the jobs market isn't nearly as strong as the last jobs number would have suggested. And maybe we'll start to see that. Of course, every bit of government data, whether it be jobs or GDP, has been revised lower for the last 18 months. And so will we get a negative number and some revisions? And is that going to be enough to kind of cause people to to get nervous. Now, I don't know what if people are going to be looking to hedge in the VIX, because ultimately it seems to me that everybody's in four names, and if they're going to hedge, maybe they'll go into the four names, and so maybe one of the reasons why implied correlation is so low. So, but to me, it seems like there's a lot of juice in those July calls. And you get a little bit bang for your buck. There's a lot of different things I think that could take those higher. A lot of potential catalysts. So that to me is where I would be focusing my attention.
Mr. Meatball, anything catching your eye in VIX options land this week, sir?
Yeah, Thursday was a really interesting trading day. And we had a big 1x5 go up. They bought the DEES 20 calls for 202, 20,000 times, sold 100,000 of the 42.5s. We had a big July 1x2. They bought the 16s for 34,000 times, sold the 1978,000 times. A bunch of call spreads going up too. You had a September 2540 and a few other things. So a pretty busy day, kind of across the board on Thursday. And there was another on Monday. There was a big sale of calls tied to futures that I thought was kind of interesting as well. They looks like they sold 117,000 of the 17 calls versus the AUG combo. So someone's basically telling us VIX ain't going anywhere.
Yeah, that's that funky trade we were just referring. Someone's had that axe to grind for a while out here, so that is kind of interesting. Speaking of axes to grind, I know a lot of you have axes to grind. In SVIX was down about exactly a point when we kicked off the show, getting some of its juice back out here right now at about a 46.5 right now. Puts it down about 0.85 from where it was this time last week. Doing actually some decent paper today, 4,500 contracts on the tape. That's against the ADV of 4,200, which in and of itself is up about 200 from last week. So moving in the right direction. Looks like what's lighting it up out there today, 1,100 of the July 45 puts. So slightly out of the money puts, and about 1,100 as well of the July 49 puts. So maybe we got a funky put spread going up. They're both opening. So intriguing stuff out there. Mr. Dr. VIX, I know you're out of SVIX, but Mr. Meatball, I hear a rumor you got some funky new strategy afoot out here in SVIX, sir. So
who have you been talking to?
I don't know. My birdies are very, very well informed.
I'm in the middle of testing it, so I can't reveal my strategy, but I think I've come up with a pretty good entry and exit system for SVIX that I'm going to be messing around with and unveiling here in the coming weeks. So stay tuned.
We need some unveiling music then for the great unveiling out there. Is it selling puts? Yes. Is that the new strategy? Is it selling puts?
It will not be a put sale. It's actually going to be primarily along the underlying, believe it or not.
Interesting. Intriguing stuff afoot. Mr. Rhoads, I know you are no longer long the underlying out there. You are out, and I think you have said to the world on Twitter officially, you are washing your hands of SVIX till the end of time. Is that correct?
That part's not true, but yeah, it got called away from me last week, and I'm looking for maybe 42, 43 to get back in. I just, it's just gotten ahead of where I thought it would get, and I sent. I don't know if you saw this in the chat, so I'm hoping you haven't, because it's quite a shocker. But I bought UVIX.
Ooh,
dang.
I am out Monday. That's all I'm telling you. It's just for the weekend.
Straight underlying. You're buying some calls. What are you doing?
No, I just bought the straight underlying. I mean, hell, the thing's like a little bit less than $6.
$6, yeah.
Yeah. So I mean, it's kind of like an option in its own right. But yeah, I bought some UVIX. I have always said that if you felt like something really bad might happen over the weekend, or there's extra weekend risk, there's nothing wrong with buying UVXY or UVIX. And I have done it a couple of times I would not follow me based on my track record, but I thought it was a pretty good shot trade there. At this point, UVIX is a lot more of July than June. And I feel like that maybe as July is going to be, that July won't grind too much lower if VIX doesn't do anything after the weekend, but it will go up if we see a volatility spike on Monday. So that's kind of the mentality behind it, is that
Russell,
I don't expect to lose a whole lot.
You could pick up some of the June 13 calls in VIX for 42 cents. That would be another idea.
Yeah, I saw that, but they expire on Tuesday.
Yes.
Yeah, and then July, I don't know if July would be as reactive for the options because so much timed expiration. But
right, it probably won't.
And honestly, you guys make me talk about weekly options. The liquidity is so bad, I don't want to get involved in that. Amazing what I say when I don't work at SIBO anymore, huh?
It is.
Mr. Rich, sir, anything catching your eye out there? And any of the twins, the inverse or the levered friend, UVIX, by the way, listeners, as Russell alluded to, hanging out right about a 6 right now, about a third of a point. Also doing some decent paper today, about 20,000 contracts. That's already more than his ADV, which is hanging out at about 18,000 right now. And the big dog position out there right now are the 7 calls going away today. So those ain't looking great. So we also have the 6s going away next week. So maybe a little bit more chance for those if what Mr. Dr. VIX is keeping an eye on comes to pass. Mr. Rich, anything catching your eye in the UVIX or SVIX twins?
Well, UVIX, I love what Russell's saying. It is totally an instant gratification vehicle. I wasn't necessarily thinking this is the weekend to see the spike in it. I'm probably be focusing more on golf than I am going to be on what's going to be the volatility events for this weekend. But I do like the idea, and as I've kind of alluded to before, I'm looking for the timing right to lean long the UVIX for trades. So that's kind of where my bias is to kind of focus on that. Not in there right now, but that's what I'd be looking for is the entry level there.
And of course, everyone's favorite UVXY was at a 24, down about 3 points to start the show, getting a little bit of juice back now, 24.60. That puts it down about 2.4 points on the week. That is not what I need. I need it to blow through 20 handle by the end of next week. It's getting so close, but so far out there. We've been joking about that trade for a while and options out of these listeners. It seems like it might go the way of the dodo, but we shall see out there. We put it on for next to nothing, so it was made for good fodder for the show, if not else. UVXY, though, starting to recover maybe from its post-split volume malaise. 65,000 contracts on the tape. That's against an ADV of about 48,000. That's up about 3,000 itself, and after today's volume, probably going to be even higher. Also, VXX was at 11:30 when we kicked off the show, up about a third of a point. Let's see if we rack it right now. About 11:23, so still pretty much up about a quarter of a point. In terms of volume today, also doing pretty decent numbers, about 70,000 contracts on the tape for VXX, so breaking away from the shackles of its volume drawdown as well. The ADV is only 53,000. That's actually down 2,000 from the week before, so I got a feeling that's going to be moving in the other direction. The big dog position out there, June 13 puts expiring next week. They got 15,000 of those bad boys out there, so those are looking pretty good right now. You know what's not looking good, though, listeners, is our VSTOXX crystal ball. Let's see if we can make it up in VIX land, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's get to it. Markets still hanging out mostly red to end the show. NASDAQ, though, flirting with unched. S&P off about 0.2%, so off slightly more, actually. I thought it was going to be pretty much unched to green. And the Dow off about a third of a point right now, so hence that little bit of a pop we're seeing in everyone's favorites, UVIX and UVXY out there right now. A VIX right now at about 12 2/3 coming into the end of the show. So let's see. Last week I was at a 12 1/4 in VIX, 12.85 in VSTOXX. So just take VSTOXX off the board. No joy for any of us. Mr. Meatball was feeling 13.31 in his palindromic nonsense for VIX, so no joy there. He was closest on VSTOXX because he had to go palindromics. That was 14.41, and even still, that was about 5 points and change too low. Russell was at a 12 even for VIX and a 13 for VSTOXX, so no joy for either of us there. And Noel from Convex was on the show with us last week. He was at 11 3/4 for VIX. He was too scared to go out to the VSTOXX waters. And no joy for any of us this week. So that means, Rich, you get the dubious honor of going first. What are you feeling for both VIX and, if you're feeling brave, VSTOXX this time next week, sir?
Oof, good question. I think I'm biased for higher vol, but I'm not, like I mentioned, I'm not really feeling it for early in the week. So I'm going to probably stick right around here at 1298 in VIX, but I think that spread's still going to stay wide. But I think I'm gonna put it like probably around I'm gonna say it's gonna be a pretty even 5 points, so 1798 in VSTOXX.
1798 in VSTOXX. And hit me with your VIX one more time, please.
1298.
1298. All right. So interesting spread. I already wrote my VIX in, so we'll get to that in a little bit. Mr. Rowe, I'll just go next. Why not? Because
go ahead.
I'll set the table for you folks. I was feeling not that far away from where Rich is, a little bit more though. I was feeling actually slightly higher on the week, 1335 in VIX. Now VSTOXX is where I'm just throwing darts at this point. Is that premium going to persist? Are we going to be higher in VSTOXX? Is more madness going to break off out there? Is it going to come roaring back in? I mean, VSTOXX could have anywhere in terms, it could be a 5-point range in terms of where it is to VIX next week. So that one I'm really kind of flying blind on. I'm going to say that premium maybe normalizes a little bit, but not much. I'm going to say 1635 for VSTOXX this time. So a whopping 3-point premium. I'm going to change that. As I say that, I'm going to go a little bit wider. I was thinking 4 points. So 1735. So that's my VIX and VSTOXX out there. But again, VSTOXX, that one's like trying to lasso a rampaging bull right now. That one's hard to nail down for 1/10 of a point. All right, Mr. Rhoads, I heard you, so you get to go next, sir. What are you feeling for both?
How about 1413 on VIX? I do think maybe some of the European stuff will start to creep its way over here next week. And I'm going to do 1918 on VSTOXX. I think it's going to remain elevated till they get the election type stuff past them.
Ooh, a terrible year and perhaps a terrible prediction. We shall see, or perhaps a good one. We shall see. And Russell, you should factor into your analysis that I am short a boatload of UVXY heading into the end of next week. So, of course, we're going to rally hard. So maybe you should be behind. I should have factored that into mine.
Let's hope I make money on Monday and then you make it the rest of the week.
Yeah, you make your UVIX over the weekend. We shall see
cool with that.
Mr. Meatball, the last word is yours, sir. What are you feeling for your palindromic nonsense this week?
All right. Well, let's see. All right, what we've got? 1298. What were you and Russell? 1298.
I was 1335. Russell 1413.
I'm high.
My goodness, you people just stealing all my palindrome. You almost stole my palindrome. You.
What was it? Were you doing 1414?
I was looking at 1441.
Oh.
And now, I mean, I guess I got to go crazy, right?
Yeah, I did come close to you on 1331, did I not? I just realized that
you totally carped my market. Let's go 1551.
Ooh.
And 2002.
Ooh. I like both of those. That could be interesting. Not looking good for my UVXY if that comes to pass, but intriguing stuff nonetheless. Listeners, what do you folks have on the docket? Get your prognostications in. If you're listening on the podcast, get them in before the end of the day today. If you're within 1/10 of a point like the rest of us, you have to play by the same rules, then you too can win fabulous prizes. Mr. Rich, well done. Excellent go-around for the first time in the Eurex hot seat this week, sir. If folks want to check out all your analysis on a variety of different stuff out there, where should they go? What should they do?
The best place is to find me on X at Excell Richard or longer form stuff on Substack at stayvigilant.substack.com. Those are the best places. But maybe coming soon, some more thoughts on Eurex and VSTOXX, et cetera, coming from me. But that's to be determined in the future.
Ooh, as we continue to lure more people to the dark side of international vol lists. Weeks like this doesn't take much. Folks are seeing that and saying, something intriguing. Check them out, of course. Stay vigilant on most of your major social media platforms out there. Good stuff on a variety of topics. Of course, you can also check them out, Excell with options over there. See me putting that stuff out quite a bit as well. Mr. Rhoads, if you got any cool VSTOXX stuff, I'm guessing you do in the offing, where should folks go to check it out?
Dude, just everything I do, I put out there on Twitter at Russell Rhoads. That's how you find my Substack and everything else. And I'm very close. I finished all of the data and everything, and this has nothing to do with VSTOXX. We did a study of the largest block directional option trades in single stock options over the last 2 years, and figured out what works and doesn't work if you try to follow those. So that one's going to get a lot of haters, but I think there's going to be some good information in there as well.
Interesting. When's that coming out, or is that already available?
I'm doing an Interactive Brokers webcast on July 12th, and the paper should be out June 30th.
Check them out, listeners. Maybe you'll like it. Maybe you'll be very angry at the results with the Once and Future Dr. Bix. Either way, check it out. Of course, give him a follow on the old Twitters at Russell Rhoads. All one word, 2 L's, Rhoads. I know it's a funky spelling. Blame him. And last but not least, Mr. Meatball, sir, if you are intrigued, or if, I should say if the folks are intrigued by all this vol talk, they want some more, where should they go? What should they do?
Yeah, follow me on Twitter at OptionPit. And again, I said it last week, Mark. We've got our big Option Pit conference coming up in Chicago very soon, July 22nd through the 24th at the world headquarters of the Chicago Board Options Exchange, the CBOE Global Markets. And we're going to get a tour of the floor. Where there's obviously a stake on me for Mark S. Longo. And we're going to have ourselves a good time. If you want to register, I'll get you a link.
Yeah, come join us. I think most of us here on the show have been on the show for a while. Will be at that event, and I will second that. The tastiest steak you will ever have could be a Ponderosa rubber steak. It wouldn't matter. It's the tastiest steak in the world because Mark Sebastian paid for it. That makes it infinitely more tasty, listeners. And Gibson steak, nothing to sneeze at either. If you want to check that out over there, optionpit.com is the place to go. And of course, if you want a deeper dive into all this data we're talking about, you want to see what's underpinning this crazy move out there with VSTOXX and everything else, Eurex.com or just STOXX, STOXX.com. That'll take you straight to the heart of all the VSTOXX stuff, which everyone is intrigued by these days. Unfortunately, if you're intrigued by more content and you're on the on-demand side, that will do it for you on our broadcast week. I want to thank all of you out there for joining us throughout this crazy Fed week. If you missed anything, it's all available on the on-demand side for you out there. If you are in the pro, head on over to theoptionsinsider.com/pro. If you're not, that'll get you access to Options Oddities coming up in a little bit after there. I see all of our chat say we'll see you later. Yeah, I'll see you guys later in Options Oddities. Should be fun. It's a fun time, listeners. We get into all kinds of weird trades over there and talk ourselves into a mess of trouble. So it's really fun. Theoptionsinsider.com/pro is the place to go to check that out. You get all the other ones we've done, as well as all the great pro Q&As. All of our guests pretty much on Vol Views have all been in our pro Q&A hot seat. So if you like to talk ball, definitely the place to go. Theoptionsinsider.com/pro. See you back here on Monday for the option block all the way through to next Friday. Another episode of Volatility Views. Stay safe out there, everybody.
The International Volatility segment is brought to you by Eurex, home of Euro stocks, VSTOXX, DAX, and the German government bond-based Eurobund, Eurobobble, Euroshots derivatives. Eurex is the leading European derivatives exchange. Learn more about trading VSTOXX futures and options, the European Volatility Benchmark, at www.eurex.com/VSTOXX. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.